And everybody, it's Tim Reazor with Revere Asset Management, 3:30 here on a Wednesday night. So very quickly, Signers, market lovers. Before you and I begin tonight's sojourn, I want to take you to the podcast page. So go to revereasset.com, go to the podcast page, and all I want you to do is take a gander at this latest podcast. If we bought every IPO and SPAC, man, we have done. Danny and I have done together 351 podcasts, and Don came along maybe halfway through. He's done half that number. And this podcast spurred the most talk and comments around the topic and people trying to figure it out. I got a huge stat I'm going to break out, Mark from Buffalo, on Friday, because he's putting the strategy to work that I mentioned in this podcast. And I love it because there's input coming in from all different directions. I love shaping the future with you strategically, and when it comes to markets, because I'm not always right. I'm certainly not always right. I like to solicit what you're thinking. You're just as smart as I am. I'm just as smart as you are. I like to get your input. I enjoy conversing with stock nerds and market lovers, and so I appreciate everyone who took time to listen to this show. Listen, any questions, concerns, comments, take umbrage with anything that I'm saying. Don't. By the way, not everybody agrees with that buying every IPO and SPAC show. Email me, tim@revereasset.com, 855-732-5932. Want to talk to the fellows that are managing the portfolios right here. This is the portfolio management team. They are available to you. That's the thing that makes Revere different. Like, you're not talking, if you call Cref Mutual Funds, you call Schwab Mutual Funds, you call Fidelity, you're not talking to a strategist, you're not talking to somebody who's actually taking action in your account. You're talking to someone who's going to have plausible deniability, and they're going to say, well, the mutual fund manager, we don't even do mutual funds. Like, we only do mutual funds when we're forced to in certain restricted 401ks, but we don't do mutual funds for a whole host of reasons, and we've covered that on a number of podcasts. But right there they are. You want to talk, you want to just talk. You're just like, you know what, this market is frustrating, I don't know where it's headed. 855-732-5932, and I swear to you, you're going to get America's fiduciary right here. Danny's going to talk to you. We don't have anything to sell. Notice there's no salespeople on the screen. That's kind of important. Everybody here, it takes action, and you're going to get straight answers, but we have nothing to sell you. So get your answers and get on your way, and hopefully we're empowering you and enabling you to do better than what you're doing. And if you're super successful, there's a bunch of successful people that listen to this, listen to my videos, watch the podcast. Hopefully we're just helping, and you're enjoying the journey with us. So anyway, look, my preferred method, I like Twitter the most, at TJ Razor, meaning that I enjoy when you DM me. If you DM me, it pops in right here. It's like we're texting buddies. I used to just give out my phone number. That kind of got a little unwieldy for me, so I just decided to use Twitter as that quick shot message. And if you want to shoot one to me, you don't have to follow me. My DMs are open. You can just shoot. And a number of you do that, by the way. You just shoot me a message. I get back to you as soon as I'm able to, and I hopefully am helping you enjoy the markets every day just a little bit more, because that's my goal. So with that, stock nerds and market lovers, these videos are for what? Your edification purposes only. Trust me, these are never, ever to be construed as advice. If you want advice, need advice, seek advice. I can't tell you enough how important it is for you to call 855-732-5932. Don't be afraid of the telephone. Do not be afraid of the telephone, I'll swear to you. So let's talk. Let's talk stocks. So here's the thing. I think a summer swoon is coming, but what I want to do is give you a way to avoid what I'm about to describe. So here are the S&P futures. Okay, you can see they're trading down 42.08, down almost 30 points on the session. And now this is the cleanup session, 3:30 to 4 o'clock Central. Then they take a break. They go to sleep for an hour, and then they restart at 5 o'clock Central. I don't know if the rest of this week is going to be a swoon. I think the summer swoon has in fact started. And what I want you to avoid, and what I'm going to help you try to avoid, is the situation where you have this amazing April, right? And then you kind of give it all up in like 4 days in May. And I want to point out to you that we haven't really gone anywhere in the S&Ps in a good old number of sessions. And I talked about on a podcast recently that topping is a process. We'll probably go up to new highs. And then where do we go from there? What's the impetus? Well, we got the new highs. And here's the thing about it that makes this super interesting. And I'll give you the technical indicator I'm looking at to show you factually if a swoon is actually underway. Here are the ATR charts. A lot of you that follow my work, I love these because it lets me graphically see is something extended or not. And so here's the mean, here's +1, here's +2, here's +3, 1, 2, and 3 to the downside. And the mean is just based on what? This 21 exponential moving average, okay? And everything reverts back to the quote unquote mean. And we haven't even been able to get past 1, right? Just not any impetus, right, in this market right now. And it's been going on since the end of May. Had this big move lower, and then you really haven't gone anywhere. And I find that interesting. And so, well, okay, now we got this retest of the mean. Where do we go from here? And so that leads me to this. Remember, what we're trying to avoid is the market takes back about 50% of what you make. Every time I did a class on this, I've done the research on this. It's like the house, man. They gave you some, and then they're going to get you filled with drinks, and then they're going to take it back. And you can go through the S&Ps, you can go through any index, go through the stocks, and you will see that big runs are followed by these moves to take half back of the gains. And so, in this case, it was pretty much just 1 month. And I know that's a microcosm, 1 month, but this is what frustrates market participants. The market has not gone anywhere, and I know a number of you are doing this because you write to me, and I appreciate that. I appreciate you trust me enough to write to me. You're churning your account. You're chumming up the waters you're throwing in fresh money into the ocean. It's chumming up the waters, and then the sharks come and take it. And because you're trying to minimize losses, and then before you know it, Bob's your uncle. All you've done is chum the waters, and your money's gone. And so, because the sharks have taken it all. And so, what I want to show you is this. Keep in mind, we are trying to prevent you from losing your money. And so how can you do that? Well, you need a trigger. You need something that helps you avoid putting more money to work when markets are tenuous. So I'm going to introduce something to you. I taught this a number of moons ago, but I'm going to introduce you to summertime, actually, when I taught it, because it was a summer fling and a summer romance class is what I called it. But it's a 5 by an 8 cross, okay? And the 5 on my charts is the purple line. The green dotted line is the 8. And look, when you get a cross, and this is, it doesn't matter how big, or we'll go here, right? October, November, you got this 5 coming through the 8 cross, just happens to be going through the 21, which is that pink line. And you get these really nice moves, okay? It works conversely as well. And so let me show you. So let me take the S&Ps, and you really want to be able to look under the hood when you're trading and investing, just to see what's coming up, right? So I think an hour is the furthest you want to go. I don't think you need to go to a 30-minute chart, but you can see that when you get a 5 and 8 cross to the downside, markets tend to come down, right? 5 to 8 cross to the downside, and all I'm doing is setting up the principle for you here, the precedent that when the 5 comes through the 8, you get downward movement. It doesn't always have to be big, but look at where the downward movement on the S&P started up here. It's the first time, you got this big move higher, then you get this at 42.51. And think about it, we're trading 42.06, 42.07, and the S&P futures tripped a 5-8 cross to the downside at 42.51. This is an hourly chart. It's pretty granular if you ask me. Let's take this up to a 195-minute chart, 2 bars a day. So 195 minutes times 2 equals the entire trading day, the cash open. And so in that fact, let's put SPX in here, not S&P futures. And so can you see where a 5 and an 8 cross and the market goes higher? Yeah, you bet your bibby you can. And that's, this is just going back to a couple Thursdays ago here. And yeah, it's a nice move higher. And then you get what? 5-8 cross to the downside, short move. But what has started here? A 5-8 cross on the 4-hour chart at 42.38. Now you're gonna, if the market stays here, the S&Ps, you're gonna go lower than this 42.23. But this is not an uptrend right now on the smaller time frame charts. You actually have entered technical selling. Like I'm like, well, Tim, come on now, let's get this to a daily chart. You're ridiculous. You don't know what you're talking about. Just a fear monger, Tim. That's all you are. It's a fear monger. And I say that if you can find a technical trigger that works for you, I'm going to ask you to employ it all the live long day. So let's go back. You know what? Let me do this. Let's take it down just a little bit, give you a little bit more chart space here. Here's 2021, and you can see the 5 and the 8 cross, and you get this nice move. They don't cross there to the downside, but look, around January 22nd, January 26th, you get a cross, and that move is 38.31. If you look to the right side of your chart, that gray bar, that's telling you the price was 38.31, and where do you stop falling? 36.82. Okay, so now let's just say that's 200 points. So remember, one S&P point is roughly 8 Dow points. Okay, so what do you think 200 S&P points equals to the Dow? Right, and you can just do that math. And so here we will do this again. So do we have another cross here to the downside? Yeah, 39.11. And where do you stop falling? 37.15. Wow. And that was the growth swoon, right? The middle of February to the end of March, that was the growth swoon. And then look here, my God, that great run that started that I mentioned at the top of the video, end of April, but here is the middle of March, you could have caught this one, but then it crosses a little bit, right? Down towards the end of the month, nothing big, but maybe when you see the cross back up, you can trade appropriately. So does this mean that you're trading all in or all out? It means that you trade appropriately, like light. Like this started to cross back here on 322. And so if you've got positions, and I'm trying to, gold, we'll do gold. If you've got positions like gold, right? So gold comes up here and wicks the third ATR. You want to be able to understand when to take profits, like how to aggressively harvest your gains. And so you just kind of use all of the information, not in a vacuum, by no means, not in a vacuum. You want to use the information with a preponderance of evidence. If you see a 5-8 cross to the downside and you've got stocks that are at the +2 ATR and +3 ATR, well, you know that the chance of a pullback at +2 ATR, because that's 2 times over the 21 exponential moving average, and you know that at 3 times you're really starting now to get extended, you at least trail up your stop, right? Now, for some of you are just buy and holders, and that's fine. That's not me being facetious whatsoever. Some of you are index dollar cost averages, and you're going, Tim, these are minor movements. These are no big deal. Absolutely, couldn't agree more. Carry on with your day. But a number of you I know that watch the content are saying, well, this was a 5-8 cross up here at 41.86, and we finally came all the way down here at 41.90, down here to 4,000. So that's another 200 points. And wouldn't you know what's starting to happen here? And I'm going to try to zoom in. Hopefully I don't distort the picture too much. It hasn't happened yet, but are we about to get a 5-8 cross? We've got the 5-8 cross on the hourly. I took it up to a 4-hour chart, 2 bars a day. And I've seen this story before. We don't have to get it, okay? We could go higher tomorrow. We can go higher Friday. Like maybe notice I haven't even mentioned the Fed really, right? Like, well, the Fed's gonna do this and the Fed's gonna do that. Like, just get out of theory. See, you don't need theory. All selling takes place on the charts. If Jay Powell wasn't charged of selling, I mean, it's a whole nother story, but he's not. It's the traders that matter, right? And so let's look at the NASDAQ. And so we'll do the NASDAQ here. We'll do NQ futures, take it to an hourly. And this is what, a couple Thursdays ago. And you can see, get that big move. Okay, works to the positive side. Yeah, a little cross there, nothing big. Remember, we're in an hourly chart. So 14,121, you can see that when you get these crosses though, they can turn, it's a heads up. You don't have to do anything. You're like, Tim, take it to a bigger time frame chart. I mean, get me out of this hourly stuff. I work for a living. I get it. I work too. And so here we go, 5-8 cross to the upside. I'm looking right here. Remember, on a 195-minute chart, there's only 2 bars. So here's June 4th, right? And so beginning of the month, and then look, we're going on this nice run. We're on the NASDAQ. Oh, it crosses. Could have avoided some of that nonsense. Look at here though, 5-8 cross at what, just 41.01, and now you're at 13,994. And so I don't know if that recovers that. Maybe tomorrow is the most bullish day the market's seen in a long time. It could happen. I mean, it's a market, anything can happen. You're looking for a preponderance of evidence. And so I can run through this with the NASDAQ, right? I can run through this, continue to do it. I can run, by the way, we haven't gotten the 5-8 cross on the daily here, but look at the Dow. You got the 5-8 cross. Let's zoom in on the Dow. We're going to keep it on the daily because I think you get the idea about the lower time frames. You got the 5-8 cross right in here at 34,513. And so that's still above the 21. It's a heads up of what potentially, when I'm telling you, when it crosses to the downside, when you get the daily cross, it's typically a pretty good heads up. And so we should also let's look at the Russell and see what the Russell's doing together, and then we'll move on from this. So here's the RTY. And then have we gotten the 5-8 cross? But look at the 5-8 cross on the daily chart here, 2264, and you finally stop falling at 2109. That's a huge move for the old Russell Rue. And so you just want to be really cognizant of where you are in time and space, have a little situational awareness. And if it looks like on the smaller time frames, you're getting the 513 cross or 5-8 cross, pardon me, 5-8 cross to the downside, and it has the potential to trigger, well, what do you do at home? Well, for me, I'm looking at patience, right? Like, is this where I'm going to make some big money? Have we had this big, massive pullback that allows me to get an edge? And so that takes me to another question, like, where's your edge? So that also begs the question is everybody still bullish? And they are. Put call ratio is up 10% today. That means nothing. 0.57, it's a big spike. Is it big enough? I don't know, man. What I do know is that this thing was pointing down lower. Everybody's bullish. We're barely just ticking up here on this 10-day moving average. That's a big deal, because what you'd want to see, what I'd want to see, is this 10-day put call moving average head up here 0.6. Look at this 0.7, and look, this is that May. You know, May led to that really nice run in the S&P 500. Yeah, you had a really nice go there. And you're like, well, Tim, well, what was that from when the put call ratio got that high? Let's see, 41.10, you know, up to 41, almost 100 points. Pardon me. You make a lot of money at good 100 points, right? Well, what about that March? Well, you can see the put call ratio gets up here to about 0.6, but you get kind of a retest. It tries to go lower again. And look at the higher you go here, 0.64. And look at this move around 326, 330. We'll just go 329. So that's, if you look over to your right, you can see the little price box says 39.38. Before you break again, 42. That's a big, massive move, folks. You make a lot of money in those moves. And so having technical triggers, understanding where you are in time and space, a little situational awareness is, I think, huge here. And for me, like gold broke trend today. And so, well, what does that mean, Tim? Like, I think your best trades come from understanding, is gold a buy here? I mean, it may be. Maybe gold rebounds here. It doesn't seem, like it's down to 3 ATR. Looks like a little bit here more than I realized. I mean, gold broke the 21, or it broke the mean. Things need to find support at the mean in my world, and it broke the mean here. And so, but why is gold still going lower here? Why is gold down so much right now? And this is the chart. Like, this is the chart I want to leave you with. It has everything to do with what I'm about to show you. Are you ready for it? So I'm about to show you this. This is the chart I need you to really pay attention to. It's the dollar. And the dollar here is screaming higher. And I want to show you something really super interesting. So look at what happened in March, right? The dollar comes down. Now, we tested this. We talked about this. This dollar tested these lows, and then it started moving up, okay? Started moving up higher. And and the dollar had this little spike here. Let's get some time frames here. 2.8, the dollar spikes, okay? And then what happens here? 2.22, dollar just makes this big move higher, and it up until here, like 3.31, and then the dollar finally collapses. And if the dollar is about to move and potentially retest this old high, which I don't know if it is, I want to point out what happened in that time frame. So let's look at the SPX. Oops, pardon me. Let's look at the SPX. So what happened in February? The dollar's starting to go higher, and look what S&Ps did. The dollar was going higher for March, but it really couldn't recover that. It wasn't until the dollar did what? Here's 325. So the dollar peaked, okay? So here's 325. And then let's look at the dollar on 325. So we'll put in DXY. Oh, didn't move on at 325, 324, 325. Yeah, the dollar was just a couple of days away from peaking, and the market went on this huge rally. And so I look at the dollar, and remember, I believe your best trades start at things that are coalescing around the 21, little flat base there. Now, what happens if the dollar gets to this third ATR around 92? I don't know if it's done going. I know that the chance of a pullback is significantly greater, just like it got up here to the third ATR and went down, and April was what? A good month, right? So dollar gets to the third ATR, it was a good month. Remember that early part in March? Yeah, dollar got up here to that third ATR and pulled back gently. And so if the dollar were to get up here, you got to understand the dollar only went up 89 cents. I'm going to less than 1% today. The dollar went up less than 1% today, and there was a big shift this afternoon. You're like, well, that was Powell. It's what Powell said. Ooh, battery's running low. It's what Powell said. So we're going to end this video right quick. But listen, just pay attention to where you are in time and space. Be able to look at this dollar chart, and I swear to you, it gets a whole lot easier, and it removes so much emotion in other people's opinion. With that, I hope it helps stock nerds, market lovers. You know I love you, and I'll talk to you at the next update.